So the first special journal we're going to look at is the cash receipts journal. It records all cash inflows to the business, so it doesn't matter what the money's for, it's going to go in our cash receipts journal if it's received by the business. So that could be for a cash sale, could be collecting money from a debtor, could be the owner making a capital contribution, getting a loan from the bank, or GST received. The format, we have a date column, so the date of the actual transaction. Under details, that's the name of the other ledger account affected. So we know cash is going to go up because we're receiving money, but what else is going to go up on the credit side? So you can see some of the transactions affect the cash sales ledger, or the debtors ledger, or the interest on investments ledger, and so on. For receipt number, we're the business that issues those, so they should run sequentially. And then we have a bank column. That's the total amount of cash that we receive. The other columns are going to allocate that bank figure. So in this case, you can see the debtors control column. That's the total amount that's been taken from the debtors account. So looking at the transactions there, you can see on January the 5th, debtor D-Bar paid us $80. That's the total in the bank column. Therefore, we allocated all $80 to the debtors control column. We then have the columns that are required for sales. So we can see there's a cost of sale for each sale, a sale, and a GST column. So looking at the transaction on January the 2nd, you can see we've entered the details as cash sale. We've got a receipt number. We've received a total of $66 in the bank column. And what we've done is allocated that to the sales column, $60, and the GST column, which is $6. We always have a cost of sale with a sale, so then we've allocated $30 as the cost of sale to the cost of sales column. That then leaves the sundries column, and that's going to be for all irregular transactions. Every business is different, but usually businesses have the same transactions each month, and then they have some which are kind of irregular. So in this case, we've got a capital contribution from the owner, which shouldn't happen too regularly, and also interest on investments. So usually interest is earned monthly, so if that's only once per month, it probably doesn't justify having its own column. So what we'll do is put that in sundries. So a good way to remember sundries is all irregular transactions, or basically anything that happens once or less per period. It just doesn't need its own column. Everything else that does happen regularly, so more than once a period, such as getting money from a debtor or making a sale or collecting GST, that needs its own special column. We'll most importantly get the totals at the end. So you can see we put the final day of the period as the date, January 31st. We write total or total receipts, and then we total up each of those columns, and that gives us a total of all the money for the month. We've got a little checking mechanism. Basically the bank column, which in this case is 6260, should equal the total of all the other columns except for cost of sales. So in this case I've got bank on the January the 2nd of 66, that equals the debtors column, which has got nothing in it, sales of 60, sundries of nothing, and GST of 6. The transaction on January the 5th, the bank column has to equal the other 4. January the 6th, the same, but most importantly the totals. So in this case, total bank is 6260. That's made up of $380 from debtors, $670 from sales, $5,143 from sundry sources, and total GST of $67.